Bankless Nation, welcome to the Weekly Rollup. Each week I'm bringing on a different co-host to help me go through the news. And this week I have the pleasure of being joined by Alex Thorn, Head of Research at Galaxy Digital. Happy Friday, Alex. Happy Liberation Day. Do you feel liberated today?
I feel liberated from my stock gains, David. But yes, happy Liberation Day. Thanks for having me.
We are going through some of the most chaotic news events in recent memory, at the very least, maybe marked by this extremely iconic photo that I have up on the screen of Trump holding what looks like a photoshopped board in his hands, but it is actually real, and it is a poster of reciprocal tariffs of just basically every single country in under the sun. And so we'll kind of go through some of the facts, and I'll get your takes on it, Alex. So yesterday, April 2nd, Donald Trump declared Liberation Day by announcing a series of significant tariffs aiming at reshaping U.S. trade policy. These measures included a 10% universal tariff on all imports, with higher reciprocal tariffs targeting specific countries based on their trade practices. For instance, China faces a 34% tariff. The European Union has 20%. Japan has 24%. So some of our largest United States trading partners got hit with tariffs that are much higher than I think anyone could have reasonably expected. And Trump just touted this as just the new dawn for America. While this was going on at 4:25 p.m., 5 minutes before markets closed, the S&P futures were trading at 1.7% higher. And then by 4:42 p.m., just under 20 minutes later, the S&P 500 had erased over $2 trillion in market cap on the news of all of these reciprocal tariffs. All of the tariffs that are being announced by this Liberation Day announcement, over 180 countries are being impacted, which is all of them. And then there's also sector-specific tariffs, mainly the automobile industry. The idea, the stated strategy by the White House on these tariffs are, one, a decrease United States dependence on imported goods, which Trump is citing as a national security issue. He wants to boost domestic manufacturing and jobs by encouraging companies to relocate production into the United States. He wants to address trade imbalances by penalizing countries that he thinks are engaging in unfair trade practices like currency manipulation or high foreign tariffs that disadvantage American exporters. And then also he wants to generate revenue so that he can fund domestic tax cuts. Like I said, stock market futures fell in real time as Donald Trump was reading off some of these tariffs. Crypto hasn't been impacted too much. We are definitely down. Bitcoin's down 3% to 82,000. Ethereum is below $1,700 or $1,800. But I would say the stock market continues to decline while crypto is just refinding lows that it has already seen. Alex, what's your digestion of all of this news? What's your take?
Yeah, it was a volatile day yesterday, right after the close, right? The president started talking in the Rose Garden at 4 p.m. So, traders, investors everywhere, including here at Galaxy and on our trading floor, very rare, but that the biggest sort of moment of the day was after equity market close. Look, I think dollar traded down to start and risk traded up. Bitcoin went up to 88.5, right? Mm-hmm. So again, still sort of in that range. I agree with your point here that even at these levels of 1777 and 82.1 where Bitcoin is and where ETH and Bitcoin are, still kind of in the chop range we've been in. I wouldn't say it's it's not yet something that's wildly outside of the range we've been trading in. But anyway, as Trump held up that poster that you were showing, that's when you saw the risk reversal happen. And I mean, Bitcoin dropped from 88 to 85 in about 30 seconds, dropped down later, kept dropping. That's when the S&P futures and other risk futures, I mean, big name FANG stocks or Mag 7s were down, almost 5 to 10% after market trading. And it's because the board that he holds up, it's become clear now, they aren't reciprocal tariffs. Mm-hmm. Those numbers are effectively the trade imbalance between our countries and those countries multiplied by 0.5.
It's a completely different number than tariffs.
Yes, these are trade imbalance times 0.05. So, or if that formula results in less than 10%, 10%. So it's actually solely the difference in our imports and exports with those countries, which is typically significantly higher than expected the tariffs would be. So what we thought we were going to get was that they went country by country and said, okay, on corn, like, I don't know, India, you tariff us 50%, so we'll tariff you 50% on corn, or generally, or whatever, right? Or if it's he kept talking about the non-monetary trade barriers. Oh, okay, you don't let us bring in our corn, right? Well, then we're not going to let you bring in your corn. And that it would be matched like 1-to-1 with the actual reciprocity between what these countries are tariffing us. And it just doesn't look like that's what they've done. They've instead done sort of classic protectionism here.
Mm-hmm. Yeah, I think this is the thing that is really confusing and frustrating investors, policy people, because there's no coherence in like why we are doing the action. So Trump wants to impose tariffs, and his justification is reciprocal tariffs. But what they are actually measuring downstream of this like interesting calculation that there was some drama on Twitter about, which we'll talk about, is actually it's just a trade imbalance is the motivation behind these crazy high tariffs. And the stated actions is not actually lining up with the words. And so this is maybe to go through some of the drama that was on Twitter. Everyone was confused about the numbers going on behind these boards, right? Tariffs charged to the United States, China, 67%. European Union, 39%, Vietnam, 90%. And people were confused about like, how did they come to the conclusion of what these tariffs are? Because the actual average tariffs charged to the United States are something much lower. Like China's actual is something around 7.5%, European Union, something around 5%. And so what they realized, this kind of just reverse engineering the math, is exactly what you said. The math going into this is something much different than any sort of tariff input. It's actually just looking at the trade imbalances and saying that, oh, if there is a trade imbalance, we are going to increase the tariffs. And so it's fundamentally going after trade imbalances, not any sort of reciprocal tariffs. But this is there's just a gap between the actual stated rationale versus the end number, which is just confusing everyone as to like what happens next. How do we respond to this? I know Switzerland made a statement as basically to the effect of, we don't know how to respond because this is incoherent. And I think that's also kind of the sentiment of domestic investors as well.
Yeah, some early responses. EU preparing retaliatory tariff measures if talks fail. China firmly opposes tariffs, will respond. Japan calls tariffs regrettable, seeks exemption, promises swift action. Germany calls for the EU to pressure Trump. South Korea orders emergency support for their affected industries. Canada vows strong countermeasures. Some exemptions remain. Mexico rejects tit-for-tat tariffs and plans a broader response. UK is seeking a trade deal but keeps its options open. Australia will negotiate, avoids counter tariffs. Brazil evaluating responses, might go to the World Trade Organization. Israel planning measures to counter 17% tariffs. So like it's rippling out. And I agree, like if we do have trade imbalances, right? Like we are often net importers because of the Triffin dilemma, right? It's the global reserve currency. We are net exporters of dollars and net importers of goods, and that is sort of the price you pay to be the global reserve currency. And wanting to reverse that is, could be a noble policy goal, but it isn't exactly what the president has been saying he was going to do. He was saying that we were being unfairly taxed. Like, why would we have to pay, inbound tariffs to some country if they're not paying them to us, right? Which they're related. Those are related topics, but solving for the trade imbalance is different than retaliating for these unfair trade practices that the president has been talking about. So I think that the difference between why he was saying he was doing it and then what he actually has done so far, it's not clear that they have actually. I don't think they take place yet. I think some start April 5th, which is Friday or Saturday, I guess. And some start April 9th, which is like early next week. Like maybe they won't start. I mean, I don't know. But basically that disparity, I think, is what really accelerated the sell-off and the fears about risk assets, because there was, I think, a view forming that maybe Monday of this week was peak tariff FUD, that basically this could be a sell the rumor, buy the news event, because they have been signaling about the tariffs for now months. So it's not like it was new information. But then I don't know if this was a mistake, if they did the messaging poorly or what, but they really did sort of drop a bomb with this like different math than was expected.
Yeah, this just a very large like gap between the tariffs
I'm
charged
just
to the
laughing
United
at
States
that.
and
Is
the
a great
actual.
photo, though. It's a great photo.
This is an iconic photo. Again, this is Donald Trump just holding up this board. Like I said, it's confusing to investors because the math going into the tariffs charged to the United States number is not correct math. And also, there's just some fundamental inconsistencies about Donald Trump's motivations, right? Like, if this is just posturing, if we are posturing as the United States to try and just come up with a very large sticker shocking number about large tariffs into the United States to use that as a bargaining chip. That is a short-term bargaining chip. But if Trump wants domestic manufacturing to return, if he's trying to incentivize Nike to build and manufacture their shoes in the United States, that is a multi-year long transition. Like, that doesn't just happen overnight. And so there's some time frame dislocations here that don't really line up. And overall, I think like one of the reasons why stock markets are just taking such a big hit right now and also continuing to go down is that this is just very hard. This is even more uncertainty when there is just a chaotic input into the calculation that people can't really understand how it really got there. That is just uncertainty into the market. And if you look around crypto Twitter, this is a Geiger Capital, who is a commentator around like general markets. He says, "I won't delete this tweet because I'm a man of honor, but yes, I was wrong on the tariffs in November. He has indeed put blanket tariffs on every country. Trump 2.0 is very different." And he is retweeting a tweet of him saying, "No one other than fairly stupid partisans on the left think Trump is going to implement 20% tariffs across everything on the board," which turns out to be exactly more or less what's happening. And I kind of think that this is sentiment that everyone who is looking at the stock market sharing right now is no one really thought that Trump would actually go this far. But he is indeed going this far off of inputs that no one could have really like predicted or seemed comprehensible.
That's right. That's right. And the surprise on the inputs yesterday, I think it became pretty clear that he was going to go pretty blanket over the last month or two, right? Like it was not maybe clear in November, to Geiger Capital's point. But again, the surprise of the math is, I think, what really spooked the market here. Like, and I mean, you're looking at the major equity indices down, 5% I was looking at as we record this, like on a daily.
It gapped open down 3%. The SPX had dropped 3% on the open, and since open, it has dropped another 1.5%. So we are down 4% on just the SPX, S&P 500.
Yeah, and I'm looking at NASDAQ is down 4.8%. I mean, this makes it I don't have the numbers in front of me, but it's certainly one of the biggest down days in years. So I don't know what to make of it. I think people were thinking that, like I said, that perhaps like peak FUD had already occurred, and that if, he came out and did, something sounded angry, but was to stake out a negotiating position, to your point, posturing, that like maybe we had priced in the fear about tariffs, but it just, we're still having it priced in for us, basically. So you're looking at a very uncertain like next couple months for sure, not just in risk markets, but also in the American economy, right? Because there's also been, some tricky data here, right? You've got the Fed, lowering its GDP forecasts. You've got weak manufacturing data. You've got high like delinquencies and credit delinquencies and mortgage delinquencies, and you've got like so there is material weakness appearing in the U.S. economy outside of the markets too. So you've got that's a tricky situation, right? And meanwhile, you've got Bessent and Trump basically saying we're not looking at the stock market right now into the short term. Right. And I was at the Cherry Blossom Summit in D.C. on Monday, which is a private conference hosted by Senator Bill Hagerty, where Bessent talked. And he said that the stock market is like a micrometer of sentiment. It shouldn't be paid too close. I mean, they're downplaying like this day that we're talking about, where stocks absolutely risk reversed huge. They're downplaying still. So it doesn't sound like they're close to the pain that they know the economy, the markets need to feel in order to get rates where they need to be and to sort of work on things like the deficit. There's more they can bear, is what they're signaling. And to me, I think that's really what the market is going to be hunting out here. Like, will they bear a 20% stock market decline? What's the number? 30? At what point is it too much to bear? And nobody knows yet, but they're holding pretty strong for now. So I wouldn't expect any kind of like dovish language coming out of Treasury or Commerce or the White House anytime soon.
Yeah, I think investors are looking at Donald Trump's statements and his actions and his words and are trying to ascertain, do we take this man at his word, or is he trying to play 3D chess? Like, is there a hidden agenda behind the scenes? Or when he says, I like tariffs and I want to implement, broad 20% tariffs across the board, do we take him at his word? And like, granted, if you go back to the 80s, you can go and find Donald Trump like records of him talking about how much he enjoys tariffs, how much he wants to tariff other countries. It wasn't China back then; it was Japan was like our big foreign trading adversary. Now it's China, but he has been like very consistently into the concept of tariffs for decades now.
Yeah.
And he is very simply stating, I like tariffs. I want to implement very high tariffs across the board. And now he is following through with that. And it seems to be, if you are an investor who literally just takes Donald Trump at his word, not assuming that there's actually a 3D game being played behind the scenes, that has been the correct way to interpret the markets almost the entirety of Donald Trump's position, both in this administration and the last time he was president.
Yeah, you're right. He has been. There's actually fascinating quotes from him in like the 80s talking about this. So, look, I think in that sense, it is fair to say that like he is basically doing what he said he would do. To your point, I don't think people really believed that he was gonna do it, and now the market is wondering, how long can they keep this up, basically, and they're saying that we're going to hold strong. So I don't know. If you read the Art of the Deal, which I did go back and read, I think Trump is pretty clear about his strategy is generally to ask for everything, right? To come out super hard with an implacable position, but he almost always caves and does a deal. And so like you have to assume at some point something gets done with all of these countries to, reach some kind of at least an accommodation where we're no longer tit for tatting, right? Because like we're now expecting retaliation for a lot of these tariffs, and then are we going to retaliate on that? And like that is why it's called a trade war. Like it escalates like a kinetic war, right? So at some point, I assume we will get to a stasis here where we stop just one-upping each other. But where that is, I mean, and that's the thing too. By the fact that Trump is very focused on the manufacturing industry and domestic, production, which I respect. Like we have hollowed out our domestic manufacturing in the United States, and like I said, it kind of flows from the global reserve currency by nature. It's kind of natural that can happen, but wanting to repair that is different than being complaining about the unfair practices we've been subjected to. And it really does look like he is much more serious about he does want to change the trade imbalance. That's actually what he wants to do. He wants America to build more, and I respect that. But that is where the messaging here was confusing, I think, because those numbers that he's proudly holding up, and you're right, people were literally brute forcing the number to try to figure out where he got these numbers. And the White House, I saw that thing, the guy James, whose tweet you showed, that did figure it out. He put it to the White House deputy press secretary, who sort of it almost seemed unbeknownst to that press secretary, admitted that that's what they did, basically.
Yeah.
So now it's confirmed that that's what they did. This is actually tariffs that are taxing the trade imbalance. They're not tariffs that are reciprocal for those against us.
Yeah, so this was kind of the drama that was going on Twitter. People were reverse engineering how we got to the numbers that is the calculation for what we think is our the tariffs being charged to the United States by our foreign trade partners. And people figured it out that it's actually just what is that calculation? It's something very simple. It's
literally just like import. It's the ratio of like imports to exports, and then they found that they just multiplied it by 0.5 to reduce it, right. So it wasn't as big, right? But like, I think that's
on Twitter, Kush Desai, who's the White House deputy press secretary, is saying like, no, we actually literally calculated tariff and non-tariff barriers. And then he tweeted out a link to the approach, including this like algorithm, this algorithm. It's basic algebra with some figures in there that go into this number. And then people will look at this Greek letter algebraic equation and be like, yes, that's exactly what we are saying you guys did. You guys just did it in Greek letters and trying to like make it super like genius level IQ. But in fact, no, you guys are just admitting that the reverse engineering of what we did, exports minus imports divided by imports, is actually exactly how we came to it.
So and look, the market had been even before. This is really a strange. By the way, this is among the best like hive mind. This is like where social media and the internet was at its best. I think figuring this out. It's a great example of like just absolutely figuring it out and telling truth to power, basically getting it confirmed. I mean, we considered this tweet from the depth effectively confirming what they did, right? So like now it wasn't just people on Twitter reverse engineering. This was legitimate journalism that ended up happening. Very exciting. I think the big problem with tariffs, right, like, is that they broadly reduce global efficiency, right? They are taxation, right? Either we're taxing them. Question of who pays is always the question, but like typically the foreign manufacturers are going to end up adding the cost of those tariffs back to the goods they produce and sell to us. So like there's plenty of historical evidence of tariffs that we impose actually being paid for by American consumers, right? Ultimately, like just like taxation in general, when you tax a corporation, oftentimes they'll just pass the cost of the tax down to their consumer if they can, right? So that is always the big question. The raising the revenue it ends up being both tax for everybody. It also reduces the global efficiency. It's in general, it's stagflationary because it's more deflationary for the tariffed producer, but it's more inflationary for the tariff imposer, right? So it creates a situation where we will see inflation in sort of the CPI sense, right? Not like monetary debasement, but cost of goods will go up, right? And I'm already telling you that like employment data hasn't totally turned, but like manufacturing looks shaky. Like the U.S. economy labor data doesn't look that good. By the way, the government, which I think the federal government has like 2 to 4 million employees, and they're firing a lot of them, right? Like, which again might be a good thing, but those are people that now become unemployed, and that's a lot of people. And these are not, for the most part, like very low paying jobs. They're not bad jobs in terms of salaries. So like you've got all those people now with less money to spend, that may seek unemployment benefits, that have their credit. You've got student loan stuff is now going to start hitting people's credits. There had been a moratorium if you didn't pay your student loans on it affecting your credit score, but that's now being lifted. So you're going to get millions of people whose credit scores drop like 100 points, right? That's going to be less purchasing power. So all of this combined with the possible inflationary nature of the tariffs are this is all what's creating that risk atmosphere. But I think yesterday, like we've talked about, it was a shock about that number situation, but like still we're still just in this period where you're looking at a possible stagflationary economic situation. And, cryptos like Bitcoin and ETH are just sort of like in the range they're kind of along for the ride right now. These are macro assets at the moment.
Yeah. Here's something that Here's what I think that is a problem about this strategy. I think the strategy of bringing manufacturing home to the United States is a noble goal, and that is something that has been persistently and a growing problem of America. Like you said, due to the Triffin dilemma, we export dollars, we export financial services. We don't do a very good job exporting manufacturing product like shoes. And if you go and look at this like reciprocal tariff, the board that Donald Trump is holding up on screen right now, Cambodia, we're hitting them with a 49% tariff. Malaysia, 24% tariff. Indonesia, 32% tariff. Thailand, 36% tariff. These are all textiles, and this is why Nike stock is being hit like negative like 12% on the morning, I think. And if the goal is to convince Nike to move their manufacturing onshore, that means that Americans are going to get those jobs. But I would contend that that's not jobs that Americans really see themselves enjoying, because that can't, like, what is the salary cap on somebody who's working in a Nike shoe manufacturing facility that's on, like, at some point Americans just aren't interested in that kind of job. In addition to that, like, robotics is going to take over. Like, we're going to automate that job much more than we're going to be able to afford a United States citizen, making Nike shoes domestically. And so the idea of moving manufacturing onshore is noble. I do not think that this is going to have the desired outcome of simply taking like Nike factories and putting it in like the Midwest to somewhere.
Yeah, it's a really good point. I mean, the automation and robotics is Also a good point, but I think the question you're asking about, do Americans want these jobs or do they see themselves? I think actually is a very important question, and I think when you have decades of your economy focused on sending everyone to college, thinking about things like technology, IT, like finance, right, medicine, like these big, everybody. It's sort of like a multi-generational thing, right? Like my grandparents came here in 1956 from Hungary, and they were just happy to survive, right? They wanted to give their daughter, my mom, a good life, and they did. And she had to try hard. But then the millennial generation, which I am a member of, and I think you are too, David, right? Our parents kind of wanted us to have everything, right? And so like, and as you cascade away from, World War II and the boomers and all the struggles that, they were satisfied doing, having freedom. They probably are much more likely to manufacture shoes. But our take it 3 generations later of all of that exporting and sort of high intelligencing of our economy, and you've got now like people whose parents also probably weren't making shoes, right? Like you're removed from that manufacturing base as a culture and as and generationally. So I think that you look at it like all the people that take out enormous amounts of debt to go to college, and like we went to college, like it's not that like helpful. Like, I mean, it was fun. I learned a lot, I guess, but like I'm not using like that much of what I learned in college in my career. And I think if you get a liberal arts degree, which so many of the student loan holders have, like, is that they were told like you have to go to college, and so like you're looking at this could take a long time, right, to re-architect the economy, to explain and exalt the nobility and the career advancement opportunities of the trades, right, of manufacturing. Like the country, a large parts of the country are not prepared to realize. And by the way, ask your HVAC guy or your plumber how much they make. If they tell you, I think you'll be surprised. It's a lot. So like these are great jobs, but like, or even like, manufacturing high-end goods. I mean, that like they're not low-paying jobs, all of them. Maybe, some are maybe, but like, but the country like has been for at least like, I don't know, at least since like 1990, it's been like hammered into every child that they have to go to college, right? And like, but the college jobs aren't the ones that are in domestic manufacturing. Like you don't need a liberal arts degree to work at U.S. Steel, like, and that's okay. I'm saying that's like a good thing. You really shouldn't. Like, what do you care about, like, reading like, poetry and stuff if you're going to be building stuff with your hands? I'm saying it's a different trade, right? And like the U.S. is not really like culturally architected around the trades like we used to be. And I think that is something that really makes this tricky as well.
I think the last point of conversation I want to bring up when we talk about this Liberation Day, the United States, we represent 26% of global trade. We definitely punch a bunch above our weight class in terms of how much trade we represent across the entire globe. 26% just from one country, that's us, USA. It's not a majority. It's 1/4 of global trade. And Donald Trump is making these moves, make it with in my opinion, the appearance that we have a lot more leverage than we might actually do. And I'm worried that we don't have the global trade dominance to just slap heavy tariffs on the rest of the world. Because that's what we did. 180 countries that we just put at least minimum 10% tariffs on. That's all of the world. 180 countries is all of the countries. And it really just seems to me that the rest of the world is just going to trade around us. Like we don't have that much of a bargaining stick that I think Donald Trump thinks that we do. And I think the next part of this conversation comes from how unified will the response be from the rest of the world. We already see the EU is responding as a unit. That's what the EU does. We also saw Japan, China, and I think one other country respond as a unit. So South Korea, how well the rest of the globe will unify against the United States, I think is going to be the next course of action to watch here.
I agree completely, and I'll keep it short, but I think you are absolutely right. That, by the way, that was from Chinese state media. I saw that headline, so I'm not discounting it. But China, if it's true that Japan and South Korea, huge U.S. allies. I mean, Japan, possibly the single most important U.S. ally, right? They literally own most of our debt, or they are by far the largest holder of U.S. sovereign debt. If it's true that they are going to act in concert with China, like that is a massive deal. It's, I would say, very bad for American geopolitical positioning because it means that we are pushing our allies into the hands of our antagonists, right? And so
I think China is stoked right now.
I mean, yeah, look, everyone's mad at us right now, right? And it's maybe a nice change or like, I mean, I agree. I think there's, look, a big takeaway, regardless of whether the goals are noble or whether the tariffs will work or whatever, whether it's reasonable to do or whether it's disruptive, many of the answers to those are yes, by the way, or no, you know, like, but this undeniably accelerates the multipolar shift happening in global geopolitics, right? Like this is going to force a realignment, this and other policies of this administration. And again, maybe that's good. I think it's very obviously a multipolar world, and it's very obviously going to further deteriorate into blocks, right? And you know, we do have the most purchasing power. We still have the best market to sell your goods in. So there is some leverage there for sure. But you're right. We're daring people to find other markets, right? I mean, that's what we're effectively doing here. And they might. So like that doesn't mean America won't be powerful or even still maybe the most powerful. Or even the biggest or best economy. We probably will be for the foreseeable future, but it does mean that our influence is going to wane, right? Like, but by choice. I mean, that's what we're saying. America, that's what America First means, is that like we don't want to have that influence anymore. We want to focus our energy at home. It's just a big idea. I don't think people are. He is following through on it, and that is this is about. I mean, if you think that the Cold War ended in 1989, right, and then the sort of Goldilocks period of American empire ended in 2001 on 9/11, and then we sort of entered this. You know, we had the war on terror period, and then like and then COVID. Like this is definitively the start of yet another new era. Is sort of my point. The sort of post-war. Everything on monetary policy is going to be true on Bretton Woods probably, right? Like the post-war order from World War II is over.
Yeah, maybe the last comment I'll make before we move on to talk about the Circle IPO. There was a quote going around from Donald Trump ahead of the actual Liberation Day, like actually the talking about the tariff numbers, was that he said something to the effect of, the globalists are not going to be happy with what I have to say on Liberation Day. That's a huge paraphrasing, but that's what he said. It's like people are not going to like what I'm about to announce, and they're all globalists. And he's like positioning anyone who's unhappy with this as a globalist, and kind of just trying to nip the criticism in the bud, saying, hey, if you're not happy with this, you're just clearly a globalist who's not putting America's interests first.
I'm not even necessarily opposed, to be clear, with what they're doing. I find the volatility exciting. Fuck it, you know. Something does something does need to give on the deficit.
I kind of like about it. I just don't know the outcome.
Agreed. It's uncertainty, and that, like, you know, people are investors. Your listeners are investors, so I get it. Like, it's and so are my clients, right? Like,
right.
But something's got to give, honestly, on the debt and the deficit. I respect they're trying, honestly, because like we have no ability to have long-term thinking in this country because of the electoral process, and so like it's nice that someone's finally going to try something different. It'll probably fail, and in like 3 years they'll just reverse everything, and then we'll go back to normal, and we'll just rack up debt to 100 trillion, and that'll be that probably. But like,
yeah. At least someone did try and stop the debt burden. That is, because like it goes something to this. What's going on here is something that like Bitcoiners have said will never happen in government leadership, which is like they will never do austerity. Why will they ever do austerity? Because we can just keep on printing money, and this is exactly the opposite of what
it is.
Like
it is.
The intent.
It's actually shocking, and I don't think the Bitcoiners were wrong to say that, but I mean, like this is why I am.
This is the exception.
That's why I think, to me, the question is, I think people are willing, investors too, macro investors, dude, everybody made a shitload of money last year in almost every asset class. So like, you know, except for Ethereum. Well, I'll stop. I'm just saying. But that's why the real question is, how much pain is the market really willing to bear? How much leash are they going to really give them? At some point, it's going to turn. Like, and right now they're still giving them a little bit. But anyway, that's the message.
Yeah. All right, Alex, we're going to get into the Circle IPO, which is another huge subject to unpack. But first, before we get there, we're going to talk to some of these fantastic sponsors that make this show possible. Imagine a world where your day-to-day banking runs on a blockchain. That's exactly what MANTLE is building, powered by a $4 billion treasury and poised to become the largest sustainable on-chain financial hub. As part of their 2025 expansion, MANTLE is introducing 3 new core innovation pillars that bridge traditional finance with decentralized technology. First is their enhanced indexed fund, aiming for $1 billion in AUM by Q1. It provides optimized exposure to Bitcoin, ETH, Solana, and USD, complete with built-in yield opportunities. Next, MANTLE Banking promises to revolutionize global value transfer through seamless blockchain-powered banking services, bridging crypto into your daily life. Finally, MANTLE X blends AI with DeFi to deliver an intelligent, user-friendly experience for everyone. And the best part is that this is all in addition to their already launched products like MANTLE Network, METH, and FBTC. Ready to step into the future of finance? Follow MANTLE on X at @MANTLE_official and join the on-chain revolution today. In the wild west of DeFi, stability and innovation are everything, which is why you should check out FRAX Finance, the protocol revolutionizing stablecoins, DeFi, and rollups. The core of FRAX Finance is FRAX USD, which is backed by BlackRock's institutional BUIDL fund. FRAX designed FRAX USD for best-in-class yields across DeFi, T-bills, and carry trade returns all in one. Just head to frax.com, then stake it to earn some of the best yields in DeFi. Want even more? Bridge your FRAX USD over to the Fractal Layer 2 for the same yield plus Fractal points, and explore Fractal's diverse Layer 2 ecosystem with protocols like Curve, Convex, and more, all rewarding early adopters. FRAX isn't just a protocol, it's a digital nation, powered by the FXS token and governed by its global community. Acquire FXS through frax.com or your go-to DEX, stake it, and help shape FRAX Nation's future. Ready to join the forefront of DeFi? Visit frax.com now to start earning with FRAX USD and staked FRAX USD. And for Bankless listeners, you can use frax.com/r/bankless when bridging to Fractal for exclusive Fractal perks and boosted rewards. Imagine verifying yourself without handing over personal data. No hacked databases, no unnecessary personal exposure for airdrops, and no AI bots ruining community governance. Meet Self, the on-chain identity verification protocol built for privacy and control. Self protocol uses zero-knowledge proofs to confirm your identity safely. Users prove key details like age or citizenship without revealing sensitive personal information. Self never stores your data, it only generates cryptographic proofs. Here's how it works in 3 steps. First, register and verify. Use the Self app to scan your biometric passport's RFID chip. Self verifies authenticity with zero-knowledge proofs. Each passport creates one unique identity. Second, you can share proofs privately. Third-party apps request identity proofs, like confirming you're over 18. You can also link proofs securely to public wallets for airdrops or governance participation. And then last, secure verification. Apps validate your proofs instantly on-chain, like on CELO, or off-chain. Audited by ZK Security, the Self app is live on iOS and Play Store. Visit self.xyz and follow Self Protocol on X. Our breaking news with this week was Circle has filed for an IPO, planning to list its Class A common stock on the New York Stock Exchange under the symbol CRCL. So we got the Circle S1 filing. We got to take a peek under the hood of what the Circle's financials looks like. $1.7 billion of revenue, and then $155 million of net income. Net income is basically profit. So there was just a lot of candy for all the analysts on crypto Twitter just to take a peek of what Circle looks like. And I think that was maybe the theme of the week. One of the big takeaways was, wow, Coinbase is making a killing off of Circle's business just by being the distribution partner around Circle and distributing USDC into the wild. There's been a lot of negative conversations around the Circle financials because of how much operating costs that they have. They are spending a ton of money on salaries and operating costs, over $250 million a year in compensation. That's pretty crazy. And so while they're making $1.7 billion of revenue, they're spending so much money. Alex, have you had a chance to unpack the S1 and what's your take?
Yeah, I looked at this. First, I would say this is a long time coming. I mean, Circle was founded in 2013 in Boston, right? I was in Boston working at Fidelity. I've known Circle for, I guess now more than 10 years, right? And they've gone through a lot of phases in their business. And I remember, in like 15 to 17, Circle Trade was by far the largest OTC desk in crypto. And that was like Dan Matuszewski, right? Like that was CMS. And then they bought Poloniex sort of at the 2017 top, right? And ended up selling that off. And I remember when they came and said they were going to do USDC in maybe it was like 2018 or 19 that they we're launching the stablecoin business. And I remember thinking this was a really stupid business in general. I was like, why would you have like given up? Like you had pole position on trading, you had an exchange. Like, why would you like, I didn't understand the appeal of number stay flat technology. And which stablecoins are. I think the story now is very, very different, right? Like stablecoins are a huge deal. I mean, I don't know what the TVL or the circulating supply of USDC is at this moment. I can
About
check
60
real quick.
billion.
$60 billion, I see. 60.7 billion USDC in circulation. That's humongous. Like that's massive, let alone Tether, right? Which is 144 billion, right? So, and this is before we get stablecoin legislation, which I think is very likely to pass, which is also a good thing, I think. So I think they're looking at timing. I mean, there had been reports for, I guess, a couple of years even that they had previously filed confidentially to go public. This is the first public S1. I think, they're running, I think, a pretty good business overall. I think the question that one of the tweets you showed raised about sharing all this net interest margin with Coinbase, I think is a question. And I mean, could they not distribute it themselves and save some of that money? But on the other hand, would it have gotten to $60 billion without Coinbase's help? Like, so, I think they have huge interest in the stablecoin legislation. And they've been active in DC advocating for it. And I think they're likely to be the sort of de facto public-private partnership. I mean, I don't want to use the big bad four-letter word CBDC, but oops, I just did. This kind of is the CBDC, right?
This is the CBDC of the United States, yeah.
Yeah, and so, I mean, you're going to get bank-issued stables. I do think you're going to get a pathway for Tether to register onshore in some way and play here. There will be competitors, and I think banks, maybe some big ones, will maybe ultimately compete and succeed at competing against Circle and Tether. But in this market today, it's about $200 billion of circulating supply, and Circle's, a huge part of that. So I think this is interesting. I think they are anticipating the legislation coming through and that adding more business opportunity for them, right? If they're public, they can tap public markets to raise more equity or debt. And so maybe that has something to do with the timing. I don't know. Also, to be clear, the prior SEC wasn't letting anybody go through really. So maybe that's the only thing for the timing, right? I can add, as it's been widely known and reported, we have been working to uplist our stock from the Canadian Toronto Stock Exchange to, a major U.S. national exchange. And we filed an updated S4 last Friday. So you can search Galaxy and Edgar on SEC also and see all of our versions of this type of information. There's, I think, probably a big pipeline of companies that want to go public. And like, I think this SEC is going to be a lot more accommodative. So I could say a lot. I don't want to comment too specifically on Circle's actual business or these numbers, but I think they've built a really impressive thing. It's no surprise they want to go public in the U.S. The timing is good when you look at the SEC. They're sort of the new leadership at the SEC, and combine that with the stablecoin legislation in Congress, which we just saw that the Stable Act passed out of committee there, like 35-17. So like these bills, which is the House version of the stablecoin bill, those will be reconciled with the Genius Act, which passed with like 5 Democrats out of the Senate Banking Committee defecting from ranking member Elizabeth Warren to vote for it. So like this looks like it's going to be a pretty big bipartisan consensus. So you can imagine that if you get honestly, let's say you get a veto-proof majority of House and Senate voting for this bill, which is only like 66 senators, right? Like this could be legislation that solidifies U.S. dollar dominance, and when you look for decades, or at least impacts it, right? I mean, but that's what's so interesting about our prior conversation here too, David, with the shifting multipolar geopolitical world that tariffs accelerate, is that on the other side of it, you have this game changer, and I actually think stablecoins are a massive deal for exporting U.S. power and influence. So you've sort of got these cross currents coming, and Circle wants to be, near the center of it.
Yeah, I'll run through. I know you want to, because just of your position at Galaxy, you want to keep some of the comments on the actual business at arm's length. So I'll just kind of run through some of the broad strokes of conversations of what people on crypto Twitter are looking at when they are looking at the Circle financials. One is the lack of growth in USDC year over year. It has been growing incredibly since July of 2023, but it's about the same that it was in July of 2022. So people have concerns about the lack of growth in Circle. Gross margin is down 33% just because there's a ton of operating expenses. People are also worried about rates. If rates come down, this comes right out of Circle's bottom line. And so they are beholden to Federal Reserve interest rates to maintain profitability. And then also people are kind of just looking at the comparison between Circle and Tether, where Circle has 900 employees, a $60 billion market cap, and in the fiscal year 2024, they made $155 million. So you compare that to Tether, which has a $145 billion market cap to Circle's 60, has 100 employees to Circle's 900, and it is generating $13 billion of net income to Circle's $155 million net income. So completely different numbers comparing the number one and number two stablecoin market cap companies. And then also just one person like commenting on all of this saying nothing to love in the Circle IPO filing and no idea how the market prices it at $5 billion. They conclude with, it feels like a Hail Mary for some liquidity before the squad rolls in. The squad, I think he's implying, is just there's going to be so many stablecoin companies. We are currently watching a stablecoin institutional gold rush for all institutions, all banks to get their hands on some part of the stablecoin stack. Circle just gets to go public first because they were ahead of the game. But this is just kind of maybe perhaps the last chance for Circle equity to get some liquidity before just so much competition comes online. Any broad response to any of that?
Well, there will be a lot of competition. I think that's clear. Pretty much every major bank has said that they want to do something here, right? I know Bank of America, I think, explicitly said they wanted to do something. You've got the OCC and the FDIC reversing and rescinding prior restrictive guidance, so that allows banks to do stuff in crypto. And specifically, the OCC one literally mentions stablecoins. They can both hold the collateral for them and they can issue them. And so, like, those pathways are now emerging, and you don't need legislation for that. You can have the bank regulator. I think the big one we're still waiting for from the bank regulators is the Fed to actually speak on bank crypto-related activity. But a lot of banks, national banks, are their primary prudential regulator is the Office of the Comptroller of the Currency. This is the OCC. They've already acted. FDI-insured depository institutions have already received some of that guidance, right? And they've removed reputation risk from their handbooks and stuff, which is a Operation Choke Point 2.0 kind of situation. So you're already getting that relief. And so, like, banks are very keen on trying. Payments companies are trying. There's myriad startups out there. I know that our venture team has invested in several, right? Cross-border payments, stablecoin tokenization, whatever, right? You've got all the crypto natives like Athena and even Maker still. That how do they play in this space? No one really knows. But the game is about to get shaken up pretty dramatically. Whereas today for collateralized stablecoins, it is basically Tether and Circle, like, at scale. And in some ways, depending on what type of institution you are, you may only want Circle. So Circle has a really pole position in the U.S., but I agree that competitive space is about to expand and get a lot more competitive.
One bit of news that came out this week was banks got the green light from the FDIC to engage in crypto-related activities. So this is a formal statement saying that, banks, you are good to go with engaging in crypto, like, broadly, whatever that means. That happened on March 25th. March 25th, the FDIC, like you said, eliminated the reputational risk category from bank exams, because that was just too subjective. This is again, like you said, just the elimination of Choke Point 2.0. Reputational risk is not something that is a part of the examination of banks. What does this mean? Can you just explain the impact of this? What does it mean for the FDIC to just tell banks, you guys have the green light with regards to crypto? What happens next?
So the paper trail for the FDIC's impeding of banks wasn't nearly as elaborate as the OCC's. So if we focus first on the OCC, the FDIC is kind of following the OCC's lead here, right? So under Brian Brooks, the OCC in, I think, 2020 published something, Interpretive Letter 1170, which allowed them to custody digital assets, right? It said, hey, banks that are under our remit, which is national banks, and I think, depositories and thrifts and like whatever, but basically national banks, you can just custody crypto, right? And this was a huge deal at the time. And then they had another one, 1172, that said you can custody stablecoin reserves. And then they had another one, 1174, that said you can use stablecoins for payments and you can operate blockchain infrastructure for settlement purposes. So those three letters under Brian Brooks combined basically told banks they could hold crypto, they could hold stablecoin reserves, and then they could use blockchains, basically, right? So then President Biden's then acting director of the OCC, or acting comptroller of the currency, Michael Hsu, he came in and issued interpretive letter 1179. And what that said, it didn't rescind those prior three guidances, but it said if you want to do any of those, you have to come to us for a supervisory non-objection letter. So you have to ask us before doing it if you can. And then, of course, the OCC didn't allow anyone to do it. So like that's how they blocked it. They didn't rescind the prior guidance. They said, you know what, actually, you got to come check with us first. And then when you did check, they said no, right? And so on March 7th, the new acting comptroller, Rodney Hood, and we're going to get yet the actual guy, Jonathan Gould, did his hearing last week, and we expect will be confirmed. They issued 1183, which rescinded 1179, meaning that banks could now go back to doing those things I said at the top, and they don't have to ask for prior approval. FDIC, and then also the OCC removed the reputational risk, and then FDIC followed suit sort of on both of these topics. So now banks can just do stuff that's like normal stuff, basically.
That's the takeaway. Banks can just do stuff now.
You can just do things now, right? So, I mean, look, there are risks like to all of this stuff, right? And they didn't say like, oh, you can just do whatever risky crypto thing you want. Right. Like they're going to be subject to other risk and prudential controls. I think part that already exists. I think part of the annoyance here was like, guys, you never told us we couldn't like use FedNow or some new technology. Like, how come with this technology we have to get this special secret pre-approval, right? Yeah. Because we're already, no matter what technology we use, we're already subject to myriad oversight and prudential regulations. Prudential meaning bank regulators can go in and say, change the makeup of your collateral. They can say, oh, your bank is lending too much, lend less. Like they can literally move your balance sheet around, right? Like that's the level of power that banking regulators have, let alone stuff like oversight controls, policies and procedures, et cetera. So they already have the power to examine and prevent a bank from doing something way too risky. So why were they being prevented specifically from using this technology? It never really made a lot of sense. It seemed punitive. It seemed part of OC 2.0 related stuff that actually we just don't like crypto, and that, oh, it could hurt the bank's reputation if they use crypto. Like, I mean, where does that line stop, right? Oh, well, like whichever current politically disfavored thing is a bad reputation. So it's great to see that this stuff is taken out, like, and it does mean, I mean, this is the type of stuff that banks needed before they were going to really act here. But if the Fed were to come out and say something, which is a little bit of a tougher animal since the Fed is a largely non-overseen organization, right? I mean, we the people have very little oversight over the Fed by the way that it's constructed. So it's much, whereas OCC is part of Treasury, right? Like Treasury, it's an office inside the Treasury Department. FDIC is an independent commission, but again, it's more integrated. It's easier to sort of to correct, to reform. So we need to hear about the Fed. That would help. I think that's sort of the last leg to drop on bank regulators or last shoe to drop, I should say. And then also the stablecoin legislation or market structure. If you get those, like now you've got it codified in federal law that it's legal and here's how to do it. I think that's when you're really looking at the TradFi-ification of crypto and stables. I mean, that's what we're on the precipice of. I don't know, like people ask, would, Vitalik or Satoshi have thought of where we're headed, but it's inevitable. I mean, like Bitcoin is for everyone, and that includes apparently big corporations, and like that's what's going to happen. So there are big fun questions about decentralization and sort of the cypherpunk ethos that a lot of us got into the space being a fan of, but nonetheless, the market is growing and maturing, and these bank rollbacks of these harsh interpretive letters is a big part of that.
UNISWAP is your gateway to a more efficient DeFi experience. With UNISWAP, swapping and bridging across 13 chains is simple, fast, and cost-effective, helping you move value wherever, whenever. Thanks to deep liquidity on the UNISWAP protocol, you'll enjoy minimal price impact on every trade. And now UNISWAP v4 takes it even further. Swappers benefit from gas savings on multi-hop swaps and ETH trading pairs, while liquidity providers can create new pools at 99% lower costs. The best part, you don't have to do anything extra. Each trade is automatically routed through UNISWAP X, V2, V3, and V4, so you get the most efficient swap without even thinking about it. Whether you're swapping, sending, on-ramping, off-ramping, or bridging, Uniswap's web app and wallet gives you the tools to unlock DeFi's full potential on Ethereum, Base, Arbitrum, UNICHAIN, and more. Use Uniswap's web app and wallet for a more efficient way to use DeFi. You may have already heard about INFINEX. INFINEX has, in my opinion, the nicest cross-chain swap and bridge feature that you will find anywhere. It is called Swidge, Swap and Bridge, and we're gonna show you what it looks like. First, we're gonna log into my INFINEX account with a passkey. Now, there's no seed phrases in INFINEX. This is just a one-click setup with biometric passkeys. But in addition to that, my INFINEX account is fully non-custodial. So bam, I just logged in. It was 2 clicks and I'm already into my INFINEX account. So let's go make a swidge. I'm gonna go swidge my USDC that is on Base, and I'm gonna buy Berachain, which is a completely different chain. So we're gonna swidge this. I'm gonna press that button, and then INFINEX is gonna execute this order, this cross-chain order for me, and now it is done. But actually, I'm not really feeling bearish anymore, so I'm gonna go from Bera to Penguins. I'm gonna buy a Penguin on Solana. So I'm going from the Berachain to Solana. See, no transaction signing, no gas to worry about. You just swidge across whatever chain that you want with INFINEX. That was so easy. Go check out INFINEX and try your first swidge today. Hopping over to an adjacent but related subject is Eric Trump has a Bitcoin mining venture with Hut 8. I'm a little bit confused as the details because I don't dive into the Bitcoin mining ecosystem all that much, which is actually great because I know you do, Alex. But something along the lines of Eric Trump is partnering with Hut 8 and wants to go public this year via by acquiring a majority stake in American Bitcoin. Do you know the details of going on here? Because I'm just butchering this.
Not really. I don't really know American mining. I would say we have a lot of public mining companies. It's one of the few in the US. It's one of the few sectors in crypto that has been able to access public markets, right? It's basically been Coinbase and miners, basically.
Bitcoin
and then
miners,
and then Bitcoin or crypto adjacent firms like, like MSTR, which is already public, but also like, PayPal, Cash App, like whatever, but the Robinhood. But none of these really, Robinhood, yes, but in sort of real crypto, like none of those miners were venture backed. This is one of the sort of, I know I'm taking this a little bit of a different direction here, but like one thing that's so exciting, I think, for people if the US public markets are more open generally for listings, not even just crypto related, but certainly crypto related, is the venture investors have backed so many companies over the years. I mean, like I said, Circle was founded in 2013, right? And like there is but yet only early investors in Coinbase were able to exit into public markets. Literally. Almost every other acquisition or merger in crypto was paid for with the acquiring also not public companies a liquid stock, like almost all of them. So there's venture investors that have been diligently investing in equity plays, again, leaving tokens aside, like that haven't been able to access. So this isn't one of those. The mining industry is very tough. Like, we've talked about and announced. Yeah, we have a big Bitcoin mining business at Galaxy, and we've announced and said that we're transitioning it into an AI data center play, and many other of the miners are. Not all of them. I mean, there's sort of one of the interesting things happening in the Bitcoin mining industry, especially if you're a mining company. I mean, there are plenty of private miners in the US and around the world. But if you are a public company or a company that mines Bitcoin, you're looking at your sites and you're wondering, can I make more dollars per megawatt, servicing the hyperscalers than I can mining Bitcoin? That's a reasonable question because at the core, these sites are warehouses with lots of electricity going into them, right? Like they can be retrofitted to service different types of machines and clients. So I don't know if that's I really don't know anything about American mining, but yes, that you look. The other thing I would say about this that with the caveat that I don't know anything really about this company and I don't know much about Hut 8 personally, is that Eric Trump really likes Bitcoin. And he actually speaks quite eloquently about crypto. I don't know if you've seen him, but the one that I watched was his appearance at the Bitcoin MENA conference in the beginning of December. and then a subsequent interview with Frank Corva from Bitcoin Magazine, just with Eric, and he gets crypto and Bitcoin. Like, he knows how it works. He knows why he likes it. He knows why it's important. He's not a tourist. So, you know, I would just say, like, this I put more weight into than some of the other, like, adjacent Trump world announcements with crypto. Eric seems to have a real view here.
Speaking of miners that are pivoting into AI, have you been following the CoreWeave IPO?
Oh, yes, of course. Yes.
Yeah. Okay. So CoreWeave IPO. CoreWeave is this company that started off mining Ethereum back in Ethereum's proof of work days, and with also the intent of eventually transitioning into an AI inference company, which is exactly what they did. And then they went public Monday of this week, I think, or maybe Friday of last week.
Yeah, I think Friday. Yeah.
Yeah. And so stock price started off flat at basically just under IPO price, and has since then just jumped a very high amount to like something like up 40 or 50%. When you saw the CoreWeave IPO, just price action, positive price action, what was any of your big takeaways or just general comments?
Yeah, I mean, CoreWeave, I've known this company for a long time. I knew them when they were an Ethereum miner, a GPU miner. They had a detour where before the AI craze really started, they were, but after or in anticipation of the merge, which would basically brick their Ethereum mining business, they had a detour into video rendering and stuff like that. I can't talk much about CoreWeave. We announced during our earnings call last Friday that we are partnering with CoreWeave, and we announced a deal with CoreWeave. So if you search CoreWeave Galaxy, you could see that deal. So I can't speak too much about CoreWeave, but in general, I would say, like, I believe the demand for compute is high, and it's higher. And I know everybody worried about DeepSeek and, like, was it lower than we thought demand would be in the future, but you know, when you saw like the Studio Ghibli stuff happening, and you have Sam Altman and Grok
so much
and
demand
Claude,
for inference.
Yeah, like there is so much demand, and I think even if something like DeepSeek or other future as yet unknown efficiency gains, right? Which they probably will come. We're an inventive species, humans. We probably will come up with other DeepSeek moments. Still, you look at the amount of gigawatts in the U.S. in servicing data centers, and it just still is not enough. Like, so maybe the way I think about it is like maybe in like 2035, like at some point, maybe the efficiencies do like pull back the net terminal amount of compute we think we need. But I don't think we're anywhere near the level of demand that is showing now. And so there is huge need for it. And it just so happens that there is an industry that spent the last, 10 years buying up like cheap power assets, right? And building data centers. Like, this is what's so interesting about the Bitcoin mining story is that, and I think I tweeted this like in September or something, but I said like Bitcoin mining was the real crypto and AI play. I mean, sure, we'll get other, agents on chain or like using payments. I think that'll be a sector too, but this is a massive reorganization of a huge industry. So not everyone can do it. There's certain, depending on where you are, like your site is, and whether you have access to fiber, and like because the latency demands are much different for AI, training and inference than they are for Bitcoin mining. You can run a Bitcoin, a giant one on like a cell phone's level of bandwidth, but you need good. I mean, these are different levels of data centers than Bitcoin mines. So there's a lot of work to do to transition them. But I think it's just a really interesting thing, and I think that it's almost like just energy in general. Like, do we really think in 100 years we're gonna have less demand for compute than we do now? Like, I think we'll have a lot more personally. The same way it's like, if you think about the degrowthers, like, do we think that there's gonna be less demand for energy in the future? I don't think so. I think it's gonna be higher. Maybe you want it to be greener or more renewable or whatever, but I think the net megawattage, the net gigawattage is gonna go up forever. Like, that would be my guess. And I think, compute is going to be, we're a digital species at this point. In my mind, you just need a lot more. I think it's really interesting. This was CoreWeave has been an exciting story to watch because, also the market, again, like if you pulled up a chart of like IPOs by year, like there have not been many for a while. Like this is, so and crypto, like I said, I think has a part to play in that story too. I hope it does. I think Circle's a good sign there. I think I want to see we want people to be able to buy and own access to good companies, and there are plenty of them in both AI and in crypto.
Yeah, as I've gotten into AI more and more, starting with the AI agents that had their bubble back in January, I thought that was going to be the most interesting thing, and it is. But I find myself getting pilled by deeper parts of that tech stack, and so I go down to, well, actually, the compute and energy conversations are fascinating, because just as you said, like, how we are going to need more than a 10x of energy to service the compute needed to, giblify the internet or do whatever we're going to do in the future when we have more AI capacity. So like there's the AI models arms race conversation. There's the nuclear conversation, which this is how we're going to power all of these things. There's the hardware conversation and the NVIDIA conversation. And I think this part of the very low level part of the stack is actually the more interesting part, because like the AI agent surface level, the cosmetic level, the top of that whole entire stack, that's going to change so incredibly fast. And it's really, we still need to build out the bottom level infrastructure, the actual physical part of the whole AI tech stack to really actually see where this goes. And I find that just immensely interesting.
I agree. I think you need more. You just need more. You're right. It's a great point. I mean, a new model still needs GPUs back there and electricity to power them. I should have said, and I'm going to say now, none of what I'm saying is financial advice. Throw that out there. No offers or recommendations or solicitations to buy Galaxy stock or any other stocks at all. But I agree. I think you just need. We need electricity. And this is this thing about what President Trump said. He said, we're going to have so much electricity. You're going to say, please, sir, no more electricity, sir. Right? I mean, I think he's right. I think you need a lot of electricity. You just do. It's an electricity. And I don't know if we're going to divert into nuclear, but I totally agree with this. It turns out there's also the world's most dense energy production capability ever that also has its only emission is steam. And it's nuclear energy. And we should be figuring out how to build more nuclear as well. It's green, guys. It's green energy.
We've got a nuclear episode coming down the pipe on
cool.
this pretty damn soon here. So we're going in that direction.
Alex,
thank you so much for joining me on the podcast today. I don't know who else I would have had on to successfully navigate some of the craziest news that happened this week. Really appreciate you. Alex, if people liked your takes, they like the sound of your voice, you've got a podcast. Maybe you can tell them a little bit more about where your podcast is and what they can expect by listening to it.
Awesome, David. Thank you so much for having me. Yeah, listen to Galaxy Brains. You can search it everywhere. You can go to galaxybrains.io. It takes you to that page that David's got on the screen now. And follow us, GLXY Research on Twitter or galaxy.com/research, or me, Intangible Coins on x.com.
Bankless Nation, you guys know the deal. Crypto is risky. You can lose what you put in, especially when we tariff the whole entire globe. This is a frontier. It's not for everyone, but we are glad you are with us on the Bankless journey. Thanks a lot.